Did you know that you need 20% to put down to buy a home? Is something that you may have heard from your parents, your grandparents, or maybe even your friends, but it's simply not true. You can actually purchase a home with far less money down than 20%. I'm Brand the Mortgage Man, and I've helped more than 10,000 home buyers in my 20+ year career. And today, I'm here to show you what the top 3 mortgage types to put less than 5% down on your purchase are. So let's get right into it. So the first type of mortgage that allows you to buy a home with less than 5% down is actually a conventional mortgage. Now, this is the most common mortgage type, and the type of mortgage your parents probably think about requires 20% down, but that's simply not the truth. So for one, you can put less than 5% down in a few different instances. One, allows you to put 3% down if you're a first-time buyer. So a first-time buyer is anyone who has not owned a home in the last 3 years. Even if you owned a home outside of 3 years ago, you sold it more than 3 years ago, you are considered a first-time home buyer, and therefore you can put as little as 3% down. The second type of person who can put less than 5% down using a conventional mortgage is someone with income that's at or below 80% AMI. AMI stands for Area Median Income. When you're at 80% or below the area median income, that means you qualify for one of 2 programs through conventional financing that allow for 3% down. These programs are Home Ready and Home Possible. So these programs are great because they allow for a low down payment, but on top of allowing for a low down payment, you actually get better interest rates than you would if you were someone who didn't meet this criteria of the 80%. So that's an added benefit. So conventional loan with 3% down. The next type of loan that allows you to purchase a property with less than 5% down is FHA. FHA loans are not just for first-time home buyers. That's a common misconception. And watch my video specifically on FHA financing where I explain all the nuances that go into this. However, FHA financing is for the purchase of a primary residence. And a primary residence means a home that you're going to live in year-round. That's a primary residence. You're going to live there January through the end of December every single year. That's a primary residence. You can go FHA. And if you're going to do an FHA mortgage for that property, you can actually put 3.5% down on that property. But did you know you can actually put less than 3.5% down using an FHA mortgage? If the property is owned by HUD, which is the Department of Housing and Urban Development, and the property is listed on the HUD Home Store, which is a real website, you can buy a HUD home using an FHA mortgage with just $100 down. Not 1%, $100. So the property has to be owned by HUD, as I said, available on the HUD Home Store, and that would allow you to do what's called a HUD REO mortgage, real estate owned, with $100 down. So that's the second type of mortgage that allows you to put less than 5% down when you're buying a home. And the third, which is the most common of the 3 for low down payments, I should say the most common, allows for the least down of the 3, is a VA loan. VA loans are going to be specific to veterans, so those who have served in the military, active duty, reservists, and the spouse of a deceased, someone that was killed in action, right? A deceased veteran. That's who's eligible. If you're eligible for a VA loan, it's 0 down. Can't really beat that. No money down. And something that, maybe you knew that already, but something you may not have known, and a lot of people don't know, is that on VA loans, what's pretty cool, is you can go up to $4 million loan amount with no money down. It's huge. And you're probably saying, what veteran's buying a $4 million home? Well, believe it or not, there are a lot of people that were in the military, served in the military, and are now in very high-paying positions or started businesses where they have a substantial amount of income. They could take advantage of their VA benefits for the purpose of real estate, and they could put no money down on a $4 million property. And there's a lot of other advantages to having a VA loan as well, but this is an awesome option if you're eligible, of course. So I would say that these are the 3 most popular types of mortgages for those looking to put less than 5% down. Of course, if you're able to put 5% or more down, it opens up the door to a lot more types of loans, especially when you get to that 20% down mark. However, if you're looking for a low down payment, as most people in today's market are, these are some great options, with the first two being available to pretty much anyone, and this third option, of course, having the prerequisite of having to do with the military. If you want more information on mortgages and real estate, make sure to subscribe to this channel for more videos just like this one. And if you have questions about your own scenario, leave a comment below. I do reply to 100% of the comments left on my videos.